Welcome to a Purple Chips update for Friday, October 26, 2012. I'm John Schwinghamer, the author of Purple Chips, published by John Wiley & Sons and available everywhere. Now please pause your video to read our disclaimer, and then I will move on with the presentation. Thank you. So today I've got a lot of material to cover. I'll try to make this as brief as possible. Let's start with some key points. First of all, in terms of an overview, the markets have been a little bit jittery prior to the elections. I think, from my perspective, I've seen a lot of low valuations in some of the very high-quality purple chip stocks, which leads me to believe that the market will not go too much lower from where it is now, and that just prior to the elections, I think we're going to start firming up as it becomes clearer who's going to be in charge. So I think the market still has some positive bias in it, and it may surprise people. So let's talk about some of the things that happened this week. We made some changes to the top 25. We moved Pepsi out of the list, and that was because it had 3 quarters of declining earnings, and we added Colgate. And the reasons are obvious for that, because the top 25 are the best purple chip stocks. So they're the ones that have the least volatility or the least variation in their earnings progress. In other words, even when times are bad in the economy, these companies keep chugging away and turning out higher. Every quarter they turn out higher earnings per share. So this is what you look for in the best purple chips. In terms of the top 25s, the low valuations that are showing up right now are still EMC, LabCorp, symbol LH, Stryker, symbol SYK, and Teva, which we've talked about for a long time. I'm not going to bore you with details on these. We're not going to look at them because I've talked about them enough. There's a couple of other stocks that are in the top 25 that are very close. For example, Becton Dickinson, BDX, and McDonald's are just on the border of becoming or of reaching our low valuation targets, so keep an eye on that. In terms of other purple chips, the ones that are not in the top 25, there's a number that are very interesting. And before I go into the details of these and show you the charts, I just want to talk about the way that we distinguish between which ones I would give priority to and which ones I would not do. There's a number that indicate low valuations, but I definitely have a way of prioritizing the signals here. And it's not obvious to you, but if you have questions about these, please contact me. The thing that we do, okay, we look at a number of metrics, not only the purely objective valuation range, but I also look at some other factors such as the price-earnings ratio relative to the market. I look at the debt levels. I look at the PEG ratios. I look at the dividends, the return on capital ratios, the earnings yield, etc. So there's a number of factors that come into the decision on how we prioritize the purple chips that are not in the top 25 list. Now, some of the low valuations that are showing up, there's Towers Watson, there's CSX, the railroad company, there's Cisco. There's Microsoft, and these are definitely the 4 in the other purple chips that I would prioritize over all others. They're the least risky, okay, because for the factors that I just mentioned. And in the also on the watch list, the things that are very close, there's Advanced Auto Parts, symbol AAP, and St. Jude Medical, both excellent companies. Now let's look at the charts of a few of those other purple chips. So I'll start with Towers Watson. So again, the reason I like this company, it's in a boring business, but it's got a terrific track record for earnings per share. And you can see on this chart, you've got the bright or the heavy white line is the earnings per share over the last 12 years, and certainly at the low end of the range. So if you just look at where we are here compared to back in the credit crisis, I mean, we're at the same low valuation. What I'm expecting is that at some point, you're going to see this stock get back into the mid-60s, so there's a fairly good opportunity there. Let's talk about CSX, one of the rail companies. Again, a fairly predictable business, very cyclical, tied to the economy, but you can see how these guys are good operators. And what I'm expecting is that at some point, I mean, currently we're at a pretty low valuation here, which is very close to what we saw back in 2009. But we could get in the high end. I think the earnings line, if we had pushed it up to 26, that would be a reasonable target. That would be consistent with other high valuations that we had seen. Now, let's talk about Cisco. Cisco's been on our radar for a long time. And let's see what we got here. We have Cisco is currently at 17.22. It's definitely in the buy zone, and I'm just going to move the EPS line to show you where it could go. All things being normal, I would expect Cisco to hit somewhere in the high 20s, possibly even into the 30s. Okay, because Cisco has been up there. If it traded at an 18 multiple, which would be just slightly higher than the market, then we would see Cisco in the low 30s, which is not bad. So Cisco is a pretty good risk at this point. Now, the last one I want to talk about is Microsoft, MSFT. And as you can see here, we had a little bit of a dip in earnings over, I'll just show you, recently we did this little move down here. Okay. However, I don't expect that to continue. There's a number of new products coming out for Microsoft, and they have a history of recovering pretty quickly. So this stock looks like it's at a cheap valuation. And certainly in this zone, anything under $28 is a bargain. And I would expect, I'm just shifting the earnings per share line here, as long as earnings stay on track, then you'll probably see Microsoft get into the mid-30s at some point. And that's still not historically a very high valuation. Mid-30s, let's say if it went to 35, would imply about a 13.5 multiple, which is not aggressive, considering that the market is trading around 15, 16 times. So that's all for today's update. I'm John Schwinghamer, the author of Purple Chips, and thank you for watching.